Good evening, everyone. I'm CA Rekha Panjwani, moderator of this webinar. Before I proceed, I must apologize for my voice today as I am recovering from cold. Thank you for bearing with me. We are delighted to welcome you all in the webinar being organized by CCLEA and NPO Committee of ICI. It is my pleasure to be a moderator in webinar on audit and certification under Rera Act 2016 being organized by Committee on Commercial Law, Economic. Sorry. This committee is focused to encourage CA to shape strategy. Just give me a second. This committee is focused to encourage CA to shape strategy and policy that unlock economic, financial, and social value while combining analytical foresight with the commercial expertise. This committee focus on analysis, knowledge, dissemination, policy input to regulator, and developing technical resources like guidance and background material. It also aimed to create awareness of professional opportunities for CA in commercial law, economic advisory, and NPO cooperatives. Our eminent speaker will talk on audit and certification under RERA Act 2016 in this webinar, and we hope that the same shall be useful to all the members. It is my privilege to introduce our esteemed speaker, a highly experienced CA Yogesh Kumar Goyal, sir, practicing since 2001 with over 2 decades of expertise. Our speaker has carved a niche in income tax, GST, RERA Act 2016, Tenancy Act 2021, Apartment Act 2010, and auditing. Their professional journey includes registering project under RERA and ensuring quarterly compliances, representing both the builders and the buyer in litigation matter, offering a strategy consultancy to builders on RARA Act 2016, Apartment Act 2010, and Tenancy Act 2021. And before that, we have a webinar on the agreement under sale. Correct, sir? I
Yeah,
guess that.
agreement to sale,
Yes.
agreement for sale under Rera Act.
Yes, now it is audit and certification. So please join me in welcoming CA Yogesh Kumar Goyal, sir, to empower the industry with the knowledge and actionable insight. Sir.
Thanks, ma'am. Thanks, Mayank ji, and thanks, uh, Committee of Commercial Law, Economic Advisory, and NPO Committee, NPO Corporations, Cooperative. The topic given to me is audit and certification under the Rera Act. Today, my throat is also sore, so I will try to do everything to complete my presentation. I am sharing my PPT. The topic is audit and certification under the Real Estate Regulation and Development Act 2016. Now, the RERA Act is a central act, but the rules regulation power is given to the state authorities. So every state has issued guidelines or directions or frames rules according to their local laws. So here I am covering three states audit and certification: UP, Haryana, and Delhi. But the people doing audit and certification in the other states, this PPT covers around 80% work of all the states. So 1 or 20, 10 or 20, for 10 or 20%, you have to go to your state's directions, rules, etc. And then you can do your audit and certification according to other states' law. For preparing this PPT, I have to go through but following documents. Number one, the Real Estate Regulation and Development Act. Number two, for UP, the Uttar Pradesh Real Estate Regulation and Development Rules 2016, Uttar Pradesh Real Estate Regulatory Authority General Regulation 2019, Uttar Pradesh Real Estate Project Maintenance of Separate Bank Account Revised Direction 2023, UP Standard Operating Procedure for Registration of Project dated 5/9 2024, For Haryana Real Estate Regulatory Authority, Gurgaon Bank Account of Registered Project Direction 2019. The Haryana Real Estate Regulatory Authority, Gurugram Authority of 10% of the receipt from the separate account maintained under Section 42 LD Regulation 2020. The Haryana Real Estate Regulatory Authority, Gurugram, compliances of Section 42 LD of the Real Estate Regulation and Development Act 2016. Next, for Delhi, I have uh, I have to go through the National Capital Territory of Delhi Real Estate Regulation and Development, registration of project, extension of registration guidelines. The National Capital Territory of Delhi Real Estate Regulation and Development Mandatory Bank Account of Registration of Project Guidelines 2023, and our own guidance note on accounting for real estate transactions 2012, certification and audit under Real Estate Regulation and Development Act 2016 issued by our own ICI, Maharashtra Rera Law and Practice issued by WIRC, and guidance note on reports on certification for special purpose revised 2016. The content prepared by me has been taken from all these sources, but the content is very limited, given in different type of guidelines. And the PPT prepared by me is a updated PPT you can use and you can enjoy. This is a very interesting topic, audit and certification. So while doing this audit or certification, you can enjoy because this is a new type of work. So I am starting my presentation now. As we know, the object of introduction of RERA Act is to establish a RERA Real Estate Regulatory Authority for regulation and promotion of the real estate sector to ensure sale of plot, etc., in a efficient and transparent manner. And third is to protect the interest of the consumers. I am discussing only these three things. Number one is regulation and promotion. Number two, efficiency and transparency. And number third is protection to protect the interest of the consumers. For achieving, and when I see the provisions of RERA Act, all the provisions are meant to achieve these objects of RERA Act. So we are discussing, and last is to establish the appellate tribunal to hear appeals from decision, directions, and orders of the real estate regulatory authority. So all the decisions, directions, and orders of the RERA authority can be challenged before the RERA appellate tribunal. So even the bank account guidelines issued by the RERA authority or registration guidelines issued by the RERA authority are the directions issued by the RERA authority, and that can be challenged before the appellate tribunal. When we see that which section hits, yeah, which section talks about the provisions of audit and certification, that is 42 LD. Section 4 is a provision where the promoter of the project is required to take registration under the apply for the registration of the project. And in the application, the promoter of the project has to submit one affidavit regarding four things. Number one, he declares that number one, that 70% of the amount received from the allottees will be kept in a separate bank account, and that amount shall be used only for cost of construction and land cost. And uh, number one, he promised that this 70% amount shall be kept in a separate account and will be used only for cost of construction and land cost. Number two, he again further promise that he will withdraw the amount from the bank account only in proportionate to the proportion of percentage of completion of the project. So he will withdraw the amount only to the extent of proportion to the percentage of completion of the project. Number third, he promised that the amount will be withdrawn from the separate account only after the certification of an engineer, an architect, and a chartered accountant in practice, who will certified that how much percentage of work has been completed, and they will uh, they will provide the figure of the figure which can be withdrawn from the bank account. And next is a promoter shall get his account audited within 6 months after the end of every financial year by a chartered accountant in practice, and shall produce a statement of account duly certified and signed by the chartered accountant that the whatever amount has been received from the allottees has been used for the project only, and in proportion to the percentage of completion of the project. So these four promises has been made by the promoter at the time of taking registration. Now, when we talks about the third proviso, here it says that audit is compulsory. As we know that if a company, if a private limited company or limited company, it is compulsory to carry on audit. If it is a society, it is also society, cooperative society. Audit is mandatory. Even tax audit is not required. Even a proprietorship firm having turnover more than 1 crore or up to 10 crore, tax audit may not be required. But it is compulsory under the Rera Act, provision of the Rera Act, that you have to carry on audit of your books of account under the provisions of Rera Act. However, there is no separate guidelines about the audit of the books of account. So audit can be done under any provisions of Act, but audit is audit is compulsory. And further, a certificate should be submitted signed by chartered accountant that books of account, the amount collected in the books of account has been utilized for the withdrawal in proportion, has been utilized for the project, and withdrawn has been in compliance with the proportion to the percentage of completion of the project. Now, when we talks about percentage of completion, whether the project has been completed, no, project is to be completed and proportionate to the percentage of completion. So first we have to take estimated cost of the real estate project. And what is the real estate estimated cost of real estate project? It has been defined under section 2V of the Rera Act 2016. Estimated cost of real estate project means the total cost involved in developing the real estate project and includes the land cost, taxes, sales, development, and other charges. So we have to take a estimated cost of real estate project before starting any certification. The purpose of introduction of certification in RARE Act. What was the reasons? As I said, the preamble said it itself says transparency, efficiency, regulation and development to protect the interest of the consumers. And now standardization and professionalism. These are the purposes to introduce the certification under the RARE Act. And what is the requirement? Through this certification, they are regularizing the bank account maintained by the promoter. And the objective of regularization these bank account are: number one, earlier the many of the project was remain stalled. The reason, the promoter diverts the fund or misutilization of fund. It was a common phenomenon. Now, through this RERA Act and through introduction of certification, they have restricted the withdrawal. Now, the withdrawal can only be done through the certification by architect, engineer, and a chartered accountant. So, after restriction, the restriction is used for number one, to restrict the diversion of fund for other purposes by the promoter. Now, the amount has to be spent for the same project only, and that amount cannot be used for other project. Number two, to ensure that the project are completed as per the agreed schedule. When there will be the amount available in the account, the promoter has to use that money in same project, and the project will be completed in a agreed schedule. Number third, to ensure the transparency in working capital management of the promoters. Number four, to ensure viability of the project on standalone basis. Because when when the project the promoter will go to registration of a project, he has to submit one project report, estimated cost of project, and he will calculate himself that what will be the future cash flows, what will be his earning. So viability will be there. Otherwise, if there will be no viability, promoter will be no good go for registration. Next is to gain the confidence from allottees that the funds invested by them are utilized towards the completion of the project. As all of know that before introduction of Rera, the property prices in India was very low, and the investor does not have any confidence in the promoters in that project which are under construction. But now, after the introduction of Rera, the allottees the investor has the confidence that if there will be any problem, Rera will take care. So this is certification, this Rera Act has given confidence to the allottees that their funds will be invested in the project only and no diversion is possible. Next, to promote a healthy and transparent real estate development with regular cash flows to complete the project. Acha. Next is in which form you have to do the certification, or what type of certificate number, which is the certificate number in which you will give your report. In UP, the certificate number has been given, or certificate has been given in UP RERA regulation 2019, and which has mentioned that architect certificate will be given in REG1, and engineer certificate will be given in REG2, and the CA certificate, quarterly amount withdrawal certificate given by CA will be in REG3, and the annual certificate, annual statement of account will be given in REG4. In Haryana, the form number has been changed, and now the withdrawal certificate will be given in Form C, and in annual certificate will be given in Form D. In Delhi, the form number are same as given in Haryana. Who can do audit and certification? There are two things. One is withdrawal certificate, and second is annual certificate. So, as per the regulation 4 of UP RERA regulation, the person should be different. A chartered accountant should be different from the chartered accountant who is auditing the books of the promoter. And in such a case, a chartered accountant should be an independent person from the statutory auditor of the company, and the statutory auditor should give a annual statement of account. So both the certification or audit work will be done by the different entity and should not be connected from each other. And what will be the effect if wrong certification is done? If the form REG issued by the statutory auditor reveals that any certificate issued by the project architect, engineer, or a chartered accountant has false or incorrect information, and the amount collected for a particular project has not been utilized for the project, and the withdrawal has not been commensurate with the proportion to the percentage of completion of the project, the authority means RERA authority. In addition to the taking penal action as contemplated in the Act, penal action will be taken against the promoter, and the rules, and in the Act and the rules, shall also take up the matter with the concerned regulatory body of the said professionals, architect, engineer, and chartered accountant for necessary penal action against them, including dismemberment. So, if wrong certification is done, complaint can be filed by the RERA authority in the institute and now in the NAFRA. So both the persons should be different, and certification should be done in a proper manner. Now is some very important, interesting point has been given in Haryana Rera Real Estate Regulatory Authority Gurugram, compliance of Section 42 LD of the Real Estate Regulation, Direction 2020. And I would like to discuss this. The Rera Authority says that what are we doing? Whether we are doing, as a statutory auditor, we are issuing a statement of account, but that statement of account is an audit or a certificate. So they are saying that from the scope of examination laid down in third provision to section 42 LD, it is seen that the reporting is about finding of facts in respect of the aspect referred to the two in the preceding paragraphs. The verification is not about expressing an opinion on the accounts as a whole or part or on any other aspect of accounts. An audit exercise usually involves formation and expression of an opinion, whereas certification involves verification and reporting of facts. Where an audit exercise usually involves formation and expression of an opinion, whereas certification involves verification and reporting of the facts as they are found. Therefore, the exercise contemplated in the third proviso means the annual certificate to subsection 42 LD of section is more akin to the certification than it is to audit. So it means whatever we are doing, whether it is a withdrawal certificate or the statement of account, both are certificate and not an audit. Next is main point क्या है? While verifying that the amount collected for a project have been utilized on the project, the auditor will examine that amount of collection from the allottees has been utilized on the project. Means whatever amount has to be collected from the allottees should be used in the project only. Means 70% of the amount should be used for cost of construction and land cost, and remaining amount will be used, the remaining 30% of amount will be used for the purpose of project only, that project only, and cannot be used freely by the promoter. The scheme of the act is such that it requires a proper promoter to deposit 70% of the collection received from allottees into a separate bank account and utilize this amount for land cost and cost of construction, thereby leading to the inference that the promoter is not free to utilize the remaining 30% in any manner, but only to be utilized for other items of the expenditure relating to the project. Therefore, the auditor will be concerned about the end use of the 30% and also the amount deposit in the separate accounts. Means 100% amount should be utilized only for that project. So, being a auditor, this is your responsibility that each and every penny has been used or expended for the project only. How to do audit and certification? When firstly, we have to give percentage of completion on estimated basis. Even the architect or engineers give percentage of completion on their own experience, and the chartered accountant has to give percentage of completion on the basis of estimated cost of construction. So, can a chartered accountant give their certificate on the basis of estimated cost of construction? So, asset 620. says the estimation of the total project cost requires technical expertise which the engineer and the architect possesses. Therefore, the chartered accountant may rely on such estimated total project cost for the purpose of his certification, certifying the percentage of completion of the project work. The chartered accountant, to this extent, is using the work of an auditor expert. So you can give your certificate on the basis of estimated cost of construction, but it must be issued either by the engineer of the project or the chartered accountant of the, oh, sorry, engineer or architect of the project. I am leaving this slide. What is the land cost and cost of construction as per the UP? Because every state has defined land cost or cost of construction in their own way. Even if you see in UP, there is a different way. In Haryana, that is different. In Delhi and Haryana almost same. But in Rajasthan, there is different land cost and cost of construction. So before issuing any certificate, you have to go to the rules and regulation issued by the authority to check what is the land cost and cost of construction in that state as per their rules. As per their rules or regulation, what is the land cost and cost of construction? Land cost in UP. Land cost shall be the cost incurred by the promoter, whether an outright purchase, lease charges, and will include the charges incurred to obtain the approval of the competent authority. Very simple, seeming very simple. Land cost and cost incurred by the promoter. What happen if the land is inherited? Cost incurred by the previous owner. There may be a difference, many difference. Whether an outright purchase, lease charges, whatever are you are paying from on your pocket for the land is a land cost. And what is the construction cost? Construction cost shall be the cost incurred by the promoter towards the on-site expenditure, only for the site. If you are paying administrative and other expenses, that will not part of the cost of construction. For the physical development, for the physical development of the project. But UP Rera Authority has issued directions on 5/9/2024, and they have defined cost of construction and land cost. So land cost in two ways. They are saying that land cost at the time of registering of the project will be taken other way, and land cost for certification of withdrawal amount will be different. What is the reason? They are saying that when you are going to registration of project, we will take the higher amount because they want to impose penalty on actual basis. But when we talks about the withdrawal amount, they says that whatever you have incurred for land cost from your own pocket will be deemed as amount to be withdrawn for the purpose of withdrawal certification. So now I am discussing 2 points in these two slides for calculation of estimated cost of project at the time of registration. This is for at the time of registration only. In case of inherited, gifted, transferred land, the cost of land shall be DM circle rate on the date of application of the registration application. So whatever the DM certificate circle rate will be taken as the registration land cost. If purchase land, then actual cost or DM circle rate. If suppose you have purchased the land 10 years back, but now the circle rate has been increased. So if purchase land, then the actual cost or DM circle rate on the date of application of registration application, whichever is higher, will be taken as land cost. And if acquired through joint development agreement, collaboration agreement, or development agreement, consideration is specified in agreement or DM circle rate on the date of application, no, of the registration application, whichever is higher. Means you have to take two project cost, estimated cost of project, two estimated cost of project. Number one, at the time of registration, and other for normal way, and you can withdraw the amount in that way only. Number two, when you are going to withdraw the amount from separate account. In case of inherited, gifted, transferred land, the cost of land shall be taken as zero in the estimated cost of the project. Means you cannot withdraw this amount in the name of land cost, as the estimated cost of this land has been taken zero. So you can only withdraw the amount. You will be able to withdraw the amount only after the completion of the project. If purchase land, if you have himself purchased the land, then actual cost will be taken and no DM circle rate will be taken. And if acquired through joint development agreement, collaboration agreement, or development agreement, then actual cost incurred by the landowner. Here, no DM circle rate, no amount written in joint development agreement or collaboration agreement or development agreement will be taken. Only the actual cost incurred by the landowner shall be taken in the estimated cost of the project. So you have to be carefully deal with this, because the project cost declare and the project cost for taking withdrawal from the bank will be different now, and will create problem if you are not aware about these provisions. Next is land cost and cost of construction as per Haryana. Para 6 of calculation of land cost and cost of construction will be as under: the land cost shall be cost paid and incurred by the promoter, whether as an outright purchase, development right, as per the collaboration agreement, deposits, any purchase of TDR, transfer of development right, made as per the prevailing policy, lease registration charges, stamp duty, and brokerage cost, etc. These are as per our institute guidance note of real estate transactions. And next step is the land cost shall be the cost incurred and paid by the promoter in case of licensee. If you have taken license in your own name, and the licensee and the promoter means you are a promoter, you are a landowner, you have taken license for construction of the project, then land cost shall be the cost incurred by you. And in case of collaboration, where the land cost has not been paid as such, and share either in built up area or in sale proceeds of the project has been settled between the licensee and the collaborator, then cost of land shall be worked out either on the basis of amount mentioned in the sale deed or prevailing collector circle rate of the area notified by the district administration. Means whatever the landowner has paid for purchasing of the land, or the circle rate, which any of this rate can be taken. So you will take always the higher amount. And construction cost in all the states are similar, that on-site expenditure of physical development, and whatever including maybe external development charges, infrastructure development charges, because these charges are paid to the development authorities. So these are also part of construction cost. Land cost in Delhi, similar to Haryana. The land cost shall be the cost paid and incurred by the promoter to make an outright purchase, obtaining development right as per the collaboration agreement, lease including registration charges, stamp duty, or brokerage cost, and such costs shall be declared by the promoter at the time of registration. So here the land cost declared at the time of registration, and after and for withdrawal of the from withdrawal certificate will be the same. In Haryana and Delhi, both will be remain same. Construction cost same. And now, what type of data you will get? We will get data from books of account. And books of account will be maintained as per the guidance note of accounting for real estate transactions. So now we will see which type of expenses we can take in our withdrawal certificate, and which type of expenses we cannot take in our withdrawal certificate. Number one, that guidance note issued by our institute says that what is the cost of land and cost of development right. But we have to take the cost and land cost as per the respective state Rera authority directions. So now we have to bifurcate the cost given in the books of account according to the respective state rules and regulation. So now we are going to understand the definition given in guidance note issued by ICI. It says that cost of land and cost of development right. All costs related to the acquisition of land, development right in the land or property, including cost of land, cost of development right, rehabilitation cost, registration charges, stamp duty, brokerage cost, and incidental expenses. Now, when we talks about cost of land and development right, all the amount are as per the respective states rules and regulation. Only remaining left one amount is doubtful, that is rehabilitation cost. Whether that amount will be allowed as a cost of land or cost of construction will be a decision taken by you on the basis of circumstances of the case. Number two, borrowing cost. As all of us know about AS 16, that borrowing cost should be taken as per accounting standard 16. But here is also some deviations in the state laws. Rare authorities understanding about the AS 16. So we will discuss this later. And construction and development cost, these would include costs that relate directly to the specific project and costs that may be attributable to the project activity in general and can be allocated to the project. When we talks about a specific cost related to a specific project, the definition given in the Rera Act is talks about directly the cost relating directly to the specific project, but that the cost may be attributable into the project activity and allocation. That is a area of concern. So we will discuss later on that which type of expenditure can be attributed and which can be allocated, and which type of expenditure which cannot be allocated to the project. And the this guidance note has also defined that what type of costs are there, which can be which we says that these are construction cost or development cost. This says land conversion cost. Is it land cost? The betterment charges, municipal sanction fees, and other charges for obtaining building permission. These are directly related to the project that can be claimed in your withdrawal certificate. Site labor cost, including site supervision, is a direct expenses. Cost of material used in construction or development of property. When we when I saw the certificate REG3 of UP Rera, it says cost of material purchased, and here the amount written as in our guidance notice cost of material used. So you have to take a decision whether which type of figure should be taken in your certificate. In my opinion, the cost of material purchase should be taken because it gives you leverage to withdraw more amount. Depreciation of plant and equipment used for the project. These are direct expenses. Cost of moving plant, equipment, and material to and from the project sites. These are also the direct expenses. Cost of hiring plant and equipment. These are direct expenses. Cost of design and technical assistant, that is directly related to the project. Next is estimated cost of rectification and guarantee work, including expected warranty cost. This cost As per our guidance note, this is a direct cost, but as per the RERA Act, this is not a direct cost for the project. So this amount cannot be claimed in the withdrawal certificate. Further is claims from third parties that can not also be taken as a part of cost of construction. And these type of cost which are not considered as a cost of construction and development cost, but if they are material. General administrative cost. General administration cost cannot be taken in withdrawal certificate, but it is a part of remaining 30% bank account. So this expenses should be done from the 30% bank account, and withdrawal will be done from that account only. Selling cost is an expenses but can be withdrawn from 30% account. Research and development cost, if directly related to the project, can be taken from uh, uh, yeah, can be posted in withdrawal account. Otherwise, if relating to the project, can be taken from 30% account. Depreciation of idle plant and equipment cannot be charged from the project. Cost of unconsumed and uninstalled material delivered at site. That is, we have taken the purchase cost of purchase material cost at in the certificate. So if the material is returned, then we have to deduct this amount in the purchase amount. Payment made to subcontractors in advance of work performed. Advance amount is not covered, so you cannot put this figure in withdrawal certificate. Cost that may be attributable to the project activity in general and can be allocated to the specific project include insurance. If there is a big project of 10 towers and the promoter has registered 4 tower in a separate registration, 3 tower in a different registration, and 2 or 3 unit in a different registration, and paying insurance of the whole project by one check. So then, if the insurance is related to the project, that amount can be attributable directly to the project, and that amount can be withdrawn from the through withdrawal certificate. If it is relating to the administrative work, insurance, then in such a case, that is not related directly related to the cost of construction and land cost, but it is a administrative expenses and can be withdrawn from 30% bank account. Cost of design and technical assistant that is not directly relating to the specific project will not part of a cost of construction. Construction or development overheads. Overheads are not covered, but relating to the projects are allowed from 30% account. And next is borrowing cost. Borrowing cost means I will discuss borrowing cost in what will be the treatment in UP, Haryana, and Delhi relating to the borrowing cost. What a chartered accountant should do, if a architect do prepare its own certificate and engineer prepares its own certificate, then both these certificates are sent to the chartered accountant for preparing his own certificate. And the architect, suppose architect certificate says that 45% work of has been completed, and chartered accountant certificate says only 35% of the work has been completed. So there will be a deviation in the percentage of completion. So in such a case, being a chartered accountant, you should reconcile the reason for differences in the certificates, both the certificates. And what are the understatements or overstatement of the relative expenses booked, the reasons, and for this, the chartered accountant should inquire the differences from the promoter. So what a chartered accountant should do, number one, he has to take number one, cost of construction, cost of the project, incurred and estimated. Means cost of estimated cost of project. He has to take first estimated cost of the project certified by the architect or engineer of the project, and what are the expenses incurred till date he should take from the promoter. Number two, receive certification issued by the engineer and architect. The certificate, because the sequence of the certification is, first of all, architect will issue a certificate. Number two, engineer will issue a certificate, and then on the basis of both the certificates and books of account, a chartered accountant will issue a certificate to the promoter. Number third is reconcile the difference, if any, in the extent of work completed as certified by the engineer and the chartered accountant. Next is point out to the promoter the issue is among emerging from the reconciliation and get the fresh data after corrective action is taken. Suppose an advance payment has been made to the subcontractor or contractor, but no work has been done. Architect certificate will show that no work has been done. He has not been concerned about the payments. But when we talks about the chartered accountant, it will reflect that such and such amount has been paid to the following architect or sorry subcontractor or contractor. So when we remove that amount paid to the subcontractor or contractor, then our percentage will be matched with the architect's percentage, and vice versa. The contractor or subcontractor has done such and such work, but no bill has been raised by him. In such a case, architect will give his certificate such type that such percentage of work has been completed, but before not but due to non receipt of bill in the or not posting in the bills in the books of account, it will reflect that uh, no work has been done. So we have to see that which type of work has been completed and no bill has been received, or payment has been done but work has not been completed. So there will be, you can reconcile the difference. Next is accept the data has been correct in absence of reason to believe otherwise. Documents document the analysis of the data and reason which lend prima facie credibility of the data. Work out the proportion that project cost incurred up to a particular date bear to the estimated cost of project. You have to calculate the what type of percent, how much percentage has been completed. Express the proportion in terms of percentage, as the completion of work has to be given in percentage. So you should give it the figure in percentage. What type of working paper should be maintained? Should you maintain? Number one, audit engagement letter or certificate engagement letter. This is very important because the first line of the certificate itself says date of appointment as a certificate auditor. So you have to take, first of all, you have to take a engagement letter, and it should mention the scope of work and what are the responsibility of a promoter, what type of document should be provided by the promoter, and what type of responsibility you are taking while certifying this certificate. Next is the relevant particulars duly certified by the promoter to be true, and every information provided by the promoter should be certified by him relating to land cost, cost of construction, and even other things incurred during the period covered by the certificate, and also the particulars to show cumulative land cost and cost of construction. Because both the figures are required to be given in the certificate, the cost incurred during the period and uh, the cost incurred till last certification. Working showing the manner of attributable of expenditure or interest to the project that is in accordance with the applicable AS. The certificate issued by the engineer and the architect. A note on exemption, if any, made while issuing certificate with reasons. A note giving reason why any evidence is accepted or rejected, or why any terms or expression is given a particular meaning, etc. The main thing is bank account. RERA authorities of UP, Haryana, Delhi, Maharashtra, all these states has issued guidelines. Guidelines for what? Maintenance of separate bank account. How can the bank account? 1 minute, please give me 1 minute only. UP, maintenance of separate bank account guidelines was firstly issued in May 2020. Then they revised the guidelines in November or December 2020, and after then that they have issued again revised guidelines in November 2023. And these guidelines are applicable immediately. So if you are going to audit in UP, issuing as auditing or certification under RERA, then before issuing any certificate, you have to go through these guidelines. These guidelines says that every promoter has to maintain three bank account. Number one, number one is collection account. Number two, separate bank account, and number third is transaction account. What is the collection account? Collection account in means you have to take 100% amount from the allottees in this bank account, including GST from the allotee, and put 100% account amount in this collection account. Then what you will do? You open one separate account in the same bank where you have collection account, and 70% amount will be transferred in this account at the end of the day in the separate account. Amount collected from the allottees. Firstly, amount will be collected in the collection account, 100% amount, and automatically will be in the evening. 70% of the amount collected from the allottees will be transferred in a separate bank account, and which will be used for cost of construction and land cost, and remaining amount transaction account will be transferred in, means 30% amount will be transferred in a transaction account, which will be used expense, which can be used for payment of expenses which are relating to the project only, that project only. What are these guidelines says? That every project should have separate three bank account, and name of the bank account has been prescribed also. ABC promoter name, collection account for XYZ project, means the permutation of combination is such that the name of the company, the nature of bank account, and name of the project will be reflected in the name of bank account and automatically transferred 70/30. Standing instruction will be given to the bank that in the evening, please transfer 70% amount in the separate account, and 30% amount will be in collection account. No debit. You cannot withdraw this. You cannot withdraw the amount from this bank account. No debit is allowed. No withdrawal is allowed through check, debit card, net banking, demand draft, bank guarantee in this account. Only auto transfer is allowed, and you have to give standing instruction to the bank that please transfer 70% amount in the separate account and 30% in the transaction account in the evening, and copy of that certificate will also be sent to the that instruction will be also be sent to the RERA authority, and in on each and every document issued by the promoter to an LOT will contain the name of the collection account, that in case if you are making payment, the payment will be done in the collection account only. We are again going back collection account. What are the laws? It says including GST. The amount of GST will be also be transferred in the collection account. Being a promoter, I have to pay GST whenever I have received any advance. And the GST rate in real estate is 1%, 5%, 12%, and in some cases 18%. So in case of 12%, 8.4% amount will be transferred in a separate account, and remaining will be available in transaction account. In case of 5% amount, tax amount, 3.5% will be transferred in separate account, and 1.5% will transferred in transaction account. But being GST is not a uh, cost of construction part, I have to pay GST from my own pocket in transaction account. So it will create financial pressure on the promoter. What is separate account? Separate account means 70% account. No lien can be created on this account. It will be and you cannot pay any assured return, incentive, or not to booked and incurred any interest or any other head subhead from the separate account. Means you cannot pay any assured return. Name of the bank account shall be in the permutation and combination prescribed by the Rera authority. On this permutation and combination has also been prescribed by the Haryana Rera authority and Delhi Rera authority. So whenever you got the statement for auditing purposes, you have to check whether the name of the bank account is as per the guidelines, because there may be possibility in case the name is different, then promoter may divert the fund in other account also. Next is, sorry. Mm, you can, if amount is there in the separate account, you can transfer this amount in a FDR account and you can earn interest from this FDR. But no lien can be created on this FDR. No loan can be taken from this FDR, and interest will be transferred in the separate account after the maturity of the all the amount, including interest, will be transferred in the separate account after the maturity of FDR. And both the promoters and bankers and the chartered accountants, both the promoters and banker has to ensure that no withdrawal from the separate account without all the three certificates, architect, engineer, and CA certificate prescribed in regulations. And in case of chartered accountant, UDNIT must. A promoter cannot pay any interest, penalty, or compensation from separate account to the LOT. You cannot pay any interest, penalty, or compensation. It means same should be paid from transaction account or through own sources. ये छोटी इसमें देखनी पड़ेगी सर। अच्छा, नेक्स्ट इज 70%. Up in case any order is given by the RERA authority about the refund to the allotee. So in such a case, when 70% amount is being transferred in the separate account when the allotee has paid to the builder, so in such a case only 70% amount can be returned back from the separate account if such amount has been transferred in the separate account earlier. If no such amount has been transferred or utilized for cost of construction and land cost, then no such amount can be refunded to the allotee from the separate account. In such a case, the promoter will be forced to pay that amount from the transaction account or from own sources. And interest. The promoter can take loan for the project. In such a case, the promoter has to take has to pay interest in respect of project in the for the project can pay interest from this separate account, but the condition is the loan amount should be transferred or should be taken in the separate account only. Full amount of loan should be transferred in the separate account only. If the amount is not taken in the separate account, then no interest can be paid from this account. And condition must be followed that the amount of loan or conditions of the loan should be informed to the RERA authority. If these are not informed to the RERA authority, then in such a case, interest on loan cannot be allowed from the separate account. No penal or compounding interest in case of loan taken from banker, FI, and unsecured loan can be paid, and no debit withdrawal allowed by way of check, debit card, credit card, net banking facility, demand draft, bank guarantee in this account is allowed. Only at NIFT and RTGS is allowed. Then bank itself do NEFT and RTGS when you provide the documents. So in such a case, there is a more control of bank, and and the payment can be made directly by the bank to the parties. Only reimbursement of expenditure is allowed. Reimbursement. What is reimbursement? Means first you expend from your own pocket and then take its reimbursement. So only reimbursement is allowed to the promoter. You cannot directly pay the amount to the party. Only reimbursement of expenditure incurred in the concerned project is allowed only after due certification of expenditure by the architect, engineer, and a CA. Bank shall not issue check, debit card, credit card, net banking facility, demand draft, bank guarantee in this account. No such thing is possible. The account shall be operated only those person who can operate this bank account. Only the director in case of company or duly authorized employee from the board of director. In case of partnership firm, partner of the firm or employee duly approved by through appropriate documents, and no third party can become authorized signatory in the bank account. And promoter cannot use this bank account day-to-day transactions. Promoter can withdraw the amount which has already been paid or utilized on construction work of the project. And one liberty has been given to the promoter that they can make payment without reimbursement also. But in such a case, this condition has to be followed by the promoter. In real estate sector, the material and labor contract are often executed on credit basis, and bill invoice by the contractor is raised timely basis for payment purposes. The chartered accountant will certify the expenditure expenses in form REG3 in two parts. Means you have to expenditure and expenses. जो कि expenditure means which has already been paid, incurred, and expenses जो कि हो चुके हैं लेकिन इनकी पेमेंट करनी रह गई है कि this amount has been uh, this expenditure has been paid. Now the only the reimbursement is required. So this reimbursement will be transferred in the transaction account, and this amount has to be directly paid to the parties. Both the list of vendors and amount to be transferred in the vendor account, contractor account will be certified by the chartered accountant in his list, which will be attached with the certificate REG 3. And every request of withdrawal should be done through along with all these three certificates REG1, REG2, and REG3 means engineer's architect certificate, engineer certificate, and chartered accountant certificate. So imagine how much work will be increased. Every request of withdrawal is required to be with certification of all these three person. So the amount mentioned, amount of withdrawal which can be done in the earlier certificate, if the limit has been exhausted, then a new certificate can will be taken. And this period may be a week, within a 15 days, 10 days, 20 days, a month. No need to take, no need to given certificate quarterly only. You may be given certificate on daily basis also. So this has become a very big area for practice uh, on certification. Special provision, I am leaving this point. ये भी मैं छोड़ रहा हूँ. Now, when we talks about transaction account is uh, ये भी to be maintained for each registered project separately, and name of the transaction account should be as per the permutation and combination given in the guidelines. ABC means promoter name, Rera transaction account for project name, so that misuse of the amount cannot be possible. And not more than 30% amount collected from the allotee should be transferred in this account, and the expenses for other than construction and development can be paid. Means you can do construction expenses and development expenses from this account also, but other expenses can also be done, but which that expenses should be for the project only. All the refunds of allottees, penalties, interest, compensation of that project can be given through this account, or from the other funds of the promoter. What are the modalities? Modalities means all the bank accounts should be opened. All three bank accounts should be opened in the same bank branch, and should be in a district where the project is located. In case of NCR, the project account can be open in NCR also. If there are more than one promoters, the lead promoter, the name of the project should be in lead promoter name, and other promoter more than if more and other promoters should execute one agreement with the lead promoter about the maintaining of account. So, bank should ensure that on the and at the closing of the day, amount from the collection account should be automatically transferred in the separate account and the transaction account. Bank should give a certificate that he will follow the guidelines of RERA Act about opening, operation, and closing of RERA project account, and the nomenclature of the bank account should be there as per the prescribed guide direction issue given in the name given in the directions. Bank should allow the withdrawal only after the verifying of expenditure and from this certificate. If without verification, bank has to also do the verification of the certification. Without certification, no amount should be allowed to withdraw. And in case of CA certificate, it has to ensure that EODIN number is given in the CA certificate. In case of Lapse of registration. What is lapse of registration? Where the period of registration of the project has been completed. In such a case, it will be called, if project is not completed, then it will be called lapse of registration. And in case of lapse of registration, bank should close the bank account, restrict the withdrawal amount, withdrawal from the separate account of the project. And bank has to accept uh, the orders of the obey the order of the Rera authority relating to freezing, defreezing of the project. Now, what are the directions issued by the Haryana Rera authorities? I have covered this Haryana Rera Authority bank directions. The direction issued by Haryana Rera Authority and Delhi Rera Authority are and UP Rera Authority. Most of the things are common. Nomenclature of bank account name may be different, but the object are same. As um, in UP, the collection account, the main account is called collection account, but in Haryana it is called project master account. And the second account is 70% account is Rera complaint separate account. And third account is the 30% account is promoter free project account. So nomenclature may be different, but the object of the bank account are same. I am not covering this because these are the same guidelines issued by UP Rera authority, and whatever is deviation is there, I have done in blue. I have given in blue color. The promoter shall be responsible for transfer deposit of 70% of the amount collected from the allottees, other than pass-through charges and indirect taxes in the project Rera complaint separate account. In UP, what was the condition? That you have to transfer the GST amount, including GST, in the collection account and then transfer in the 70-30 ratio to separate account and transaction account. But in Haryana, it is saying then when you collect the amount in the collection account, you have to transfer in the separate account and transaction account 70% and 30% amount, other than pass through charges or indirect taxes. Means if you have collected GST or the amount which are liable to be paid directly to the authorities, then such amount should not be transferred in a separate account or transaction account. In the case of project where the estimated cost of the of to complete the project is higher than estimated amount, here is said then during the construction of the project, you assume that the cost of the project is going to increase and the amount recoverable from the allottees is less, then in such a case 100% of the amount collected from the allottees should be transferred to the to separate account, and no amount should be transferred in transaction account. And if the condition is if the till the situation eases out, means 100% amount may be transferred to separate account, meaning shall be transferred to Rera complaint separate account, but no such guidelines in UP regarding this. Same, these are same as given in UP. This account is in nature of reimbursement account for reimbursement of expenditure incurred and paid on the proportionate land cost and construction cost. Reimbursement means first you have to incur from your own pocket and then you can collect, you can transfer from here to the via transaction account. No amount from this account shall be utilized towards repayment, prepayment of project loan facility, if any. So in UP, all the loan amount should be transferred in the separate account, but here you cannot pay any interest, any installment from separate account. Means you need not to take any amount, any loan amount in this separate account. Means you can take that loan amount in the transaction account, because this is he is not allowing you to withdraw the amount for payment or repayment purposes or interest. Rera complaint separate account. A certificate in this spare money in this account can be used for making FDR, but no lien or loan can be taken on this FDR. Similar provision as given in UP. A certificate to this effect. But about certification, nothing has been said in UP. In Haryana, means I am talking about Gurugram only, because in Haryana there are two authorities. Gurugram has different regulations, and Panchkula authority has different regulations. So I am talking about Gurugram only. A certificate to this effect shall be taken by the promoter of the chartered accountant from the bank quarterly that no lien has been created, and the same shall be submitted with the authority. If you are making FDR, the one certificate has also been taken from the bank that no lien has been created. Now they have done some changes in the month of January 2023. They have said that you can create lien on fixed deposit in 70% RERA account for bank guarantee, as may be allowed only to the extent of those charges which are in a fixed written has been fit, but it may be fixed charges under 70% RERA account. And in my opinion, the amount payable to the governmental authorities, for them only this lien can be created. Other lien is not possible to create on this FDR. In case of withdrawal of allottees from the project, then principal and interest amount shall be withdrawn in same proportionate uh, from the separate and free account. In case of withdrawal of allottee from the project, then principal and interest means here you can also withdraw the interest payable to the allottees because they are deeming when you collect the amount from allottees, the principal amount has been collected and you have earned interest on that amount that account. So here they are allowing amount payable to the allottee can be withdrawal, and you can pay principal amount, you can pay interest amount, but should be in proportionate from separate and free account. Means you can withdraw 70% amount from separate account and remaining amount from free account. Three certificates to be filed quarterly if withdrawal is required on interim basis. This certificate is required to be filed with RERA authority. If withdrawal is required on interim basis, the fresh certificate to be submitted with the authority in interim period. If you want to withdraw during the quarter, then first of all, that certificate has to be submitted with RERA authority. Then you can withdraw the amount. Period of filing three certificate may be reduced by the promoter at the time of taking registration of the project. You can say that we will file this certificate on monthly basis, then you can file monthly basis. Separate account passbook should be certified by CA and to be submitted by the promoter with the authority. Through 16/9/2020, the RERA authority has issued direction that 10% of the amount collected from the allottees to be paid in respect of EDC through separate account. EDC is payable to the government. External development charges, which are payable to respective development authority or DTCP. So to secure the payment, that it has been paid timely, it should be paid timely by the promoter. They had allowed that 10% of the amount should be paid uh, uh, from EDC, from separate account to EDC, external development charges. What is the and last is project free account. Project free means the transaction account in UP. The finance and loan of the project shall be taken in this account only. In UP, you have to take in separate account. Here, you can take in free account. This amount shall be free account and can be utilized for making finance cost and prepayment of loan, if any. Funds available in this account may be used freely for business activities related to the same project, and the amount is can be used only for project only. Now the question of when we were reading our guidance note, it says appropriation attributable. So now you can pay attributable expenses from the free account because they are relating to the same project. So you can withdraw from here the attributable expenses on the project. Banker's liability, and banker should submit one affidavit with Rera authority that he will comply the provisions of Rera Act issued and direction issued by Rera authority time to time. Now we talks about Delhi. What is the difference? I have covered in red mark. Earlier it was blue, and for Delhi it has been given in red. Now here the name again name change. Project master account, project Rera escrow account. In UP that was a separate account. In Haryana also that was a separate account, and here it became escrow account. And third is project free account, that is 30% account. The difference is the promoter shall withdraw the amount from this account to cover the cost of project only, and that shall at a time not be more than the requirement of the next final financial quarter. Means if you have withdrawn the amount, only the reimbursement is allowed. Even in the reimbursement, you cannot withdraw the amount more than which are required in next month till the project is not completed. If the project is become completed and the occupancy certificate, completion certificate, then you can is available. Then you can apply for with the Rera authority, and they will allow to close the bank account. Till then, you cannot withdraw more than the amount which is required in next month, next quarter. The promoter shall obtain a certificate of an engineer, an architect, and a chartered accountant appointed for this purpose by the promoter that withdrawal has been in proportionate to the percentage of work completed before withdrawing any money in the next financial next quarter. Means you have to submit quarterly certificate, then only the banker will allow withdrawal. The third expenditure of the escrow account means separate account. The funds in this account shall be used strictly for meaning expenditure on the following purposes. Two purposes are there only: land cost and cost of construction. So they have defined, they have given land cost include the registration charges as per law, construction and development of the project like the interior work, landscape development, development of common facilities like pool, gym, lights, etc. Payment of prescribed fees required for seeking various approval from concerned development department oblique authorities. So you can pay the amount from the separate account only for these purposes. No expenditure shall be made from this account for any other purposes like advertisement or marketing of the project, payment of prepayment rebates, cost of finance. You cannot pay interest from this account. You cannot give discount to the allotee for prepayment. Means you have to collect full amount from the allotee if he is making prepayment, but rebate can be refunded to him through transaction account. Now we are talking about free account. This amount shall be free account. This account shall be free account and can be utilized for making finance cost and prepayment of the loan, if any, same as Haryana. The funds available in this project may be used freely for business activities relating to the same project, provided that the authority has not issued any direction to the promoter for such account, because authority has the power to issue directions. And like in Haryana, when it says if the promoter thinks that the cost of construction has been increased and the amount collected from the allottees will remain less, then in such a case 100% of the amount will be deposited in the separate account only. So again here, Rera authority may issue directions which may be otherwise. And they are saying that you can use this amount, this free account amount for these purposes only. The promoter shall utilize money deposited in the free account for making the expenditure of following purposes: advertisement, repayment of loan and interest, paying cost of finance, paying prepayment benefits, all kinds of livable, all the taxes livable as per law, means income tax, GST. Here also pass through charges and GST are allowed before transferring in the separate account and free account. Now I am talking about one landmark judgment given in Neil Kamal Realtors Suburban Private Limited. Given it was given in 2017, and now the guidelines has been issued by various Rera authorities. So whatever this judgment is saying, same has been done by the Rera authorities. The this is a landmark judgment given by Honorable Bombay High Court in case of Neil Kamal Realtors Suburban Private Limited versus Union of India, and where the validity of opening three bank accounts or separate bank maintaining of separate bank account was challenged by the promoters, various promoters, and the court observed that the amount realized by the promoter, the one apprehension of the promoter was that the amount collected by the allotee has been snatched by RERA authority through this bank account. The court has said the amount realized by the promoter would remain his money, means it cannot be taken by RERA authority, and in no case expropriated or taken over in any way by the authority under RERA. The amount is merely sought to be deposited in a uh, separate account to ensure timely completion of the project. The deposit made by the promoter can duly be withdrawn upon certification and under the instruction of the authority. There is no restriction upon the right of the promoter. The money is to be deposited for ensuring that it is utilized for the purpose of the project and not misused. Next, whereas the provision of section 42 LCD means where it is has been wrongly written in the judgment itself. I have reproduced this. However, it must be 42 LD. It states that 70% of the amount realized for the real estate project from the allottees to be deposited in a separate account, which means that 30% of the amount realized shall remain with the promoter developer, which would be to the benefit of the promoter. In a way, the provision balances the right of the promoter and the allottees. But now, RERA authorities is taking strict interpretation of the provisions of Section 42 LD. And Section 42 LD says that amount should be used for the project only. Means 70% amount will for the cost of construction and land cost, and remaining 30% amount from the for the land for the project only. So the promoter can use the amount for the benefit for his own benefit, but cannot be used for other purposes other than the project. The promoter has to deposit 70% of the. This judgment was written by two judges. One has given, and both the judges has written their order separately. So first has given is judgment in para number 97 and 98, and second one has given in para number 191. This is a 330-page judgment and very beautiful judgment. The promoter has to deposit 70% of the amount realized from the project from the allottees from time to time in a separate account to be maintained in a scheduled bank to cover the cost of construction and the land cost, and shall be used only for that purposes. Interest accrued thereon is credited to that account. The promoter retains with himself 30% realized from the allottees. The provisions there to enable the promoter to withdraw the amount subject to satisfying the conditions stipulated therein as per section 42 LD. And last, when you are issuing any certificate, our institute has issued guidance note on reports of certification for special purposes. So each and every our member, each and every member should used the paras given in that guidance note and should make disclosure about the certificate. This will this is for our safety, and certification should be done strictly according to the guidance note. Penalties: if the promoter is not complying the provisions of section 42 LD, non-compliance of these direction by the promoter in any manner will be punishable under section 60 or 63 of the Rera Act, which may be up to 5% of the cost of the project. So penalty may be imposed. Disclaimer: this presentation has been a summary of the provisions, guidance note, guidances, rules, regulation, directions, guidelines. So before taking any decision, please go through yourself, and this is my opinion only. Please not to use for giving any consultancy on the basis of this PPT. Please read yourself. Thank you very much. Now we can take question and answers.
Yes, sir. Mm, Members can put their questions in the chat box. There is a question from Dr. Sanjay. Is getting registered under the RERA absolutely mandatory for a developer or a promoter? So, to the state prior to undertaking any work of a new construction? If so, under what overriding condition or cardinal principles, and how and where to go about it? In case if it is not mandatory, what are the possible exemptions and limits thereto, if any? How to execute and put to use the same under real life condition?
The question is relating to Section 3 of the RERA Act, that which type of project are required to be registered under the RERA, and what are the exemptions are there. There are two conditions that every project in a planned area. Planned area means where the development authorities are making planning and development authorities are approving maps. So every project having area more than 500 square meters or having more than 8 units are compulsory to be registered with the RERA authority. Before registration, they cannot do any advertisement, marketing, booking, selling, or inducing any person to making advance or making booking in the project. So you have to take decision before launching any project. If you are not doing any, uh, if you are not taking any booking from any person, you are not advertising the project, marketing the project, or selling the project. Selling means sale. Sale means doing registry. Even if you have project, you have completed the project, and you want to sell. So if before selling, you have to take the registration before the authority. And one
Okay.
exemption is exemptions are: number one, the project should be less than 500 square meter, 500 or less than 500 square meter. Number two, the number of units should be less than 8. Number third, it may be out of a planned area, or these are conditions should be verified before taking a decision about registration.
Okay, sir. Next question is, I had initiated registration of one project as a partnership firm in Maharera, but the same was required to be registered under proprietorship type since JDA, and all the documents were in the name of a proprietorship name. Although the registration under partnership firm did not happen, but the registration fees got paid under partnership firm name. Now, while registering under proprietorship type, can I adjust the fees already paid earlier under partnership firm. Please note that the partnership firm is going to be dissolved, hence no project will be registered under partnership firm.
I am not much aware about the procedures of Maharera. Please consult the Rera Authority, Maharera expert, or discuss with Maharera Authority official.
Okay. Then the next question is from Rohit. Some states have been given specific regulation pertaining to maintenance of separate RERA account in bank, where it maintaining a escrow account with the bank where the 70% amount is automatically transferred to separate account. However, in some state, no regulations are given and the act simply states maintain separate bank account. So the real estate developers maintain a separate account which is not escrow. However, they suo moto ensure that the RERA rules are adhered to regarding deposit and withdrawal, whether this is in compliance of the act or whether escrow account is compulsory, even whether no regulation is there for it.
In my opinion, escrow account is Rera account is not a escrow account. Number one, this is not a escrow account because here is no third party signature is required. In escrow account, third party signature is required. It is used in issuing for listing of equity shares where escrow account is required. So this is not such account. We cannot say that this is a escrow account. But as per the conditions given in 4.2 LC, you have to maintain the separate account. And the easiest way to maintain the separate bank account is to maintain three bank account. Even the authority does not given any directions. You should maintain the bank account as per these three bank account. And even RBI has issued guidelines to every bank for issuing for opening the bank account as per RERA. So even no guidelines are there, it will be beneficial for you that you will be able to maintain properly the bank account as per RERA guidelines.
Okay. Next question is from Alok. In case of withdrawal, can monthly certificate from CA, architect, engineer be given?
Even it may be given on weekly basis, daily basis, 15 days, 20 days. It depends upon withdrawal. Even it may be given after 6 months till the last amount has not been withdrawn. Till the last amount given in the certificate has not been exhausted. So certificate is required only after the amount has been exhausted. Amount given in the earlier certificate has been exhausted.
Okay. What are the various guidance note available on specific certifications?
Guidance note is earlier the ICI has issued a guidance note in 2017, and the I think no other guidance note has been issued. Updated guidance note has been issued, and it is not easily. It is not possible to cover each and every state. So every state's guidance note is not possible for the institute. So you have to go through the guidelines issued by that authority time guidelines issued by the authorities time to time. But it will be better because the audited guidelines are same, but maintenance of separate bank account guidelines issued by the authorities are different. So the base will remain same. There may be some deviation given by the guidelines of state RERA authorities. So you have to gone through that. Audit, there is no difference in audit in every states.
Okay. Next question is, if a developer is constructing seven different bungalow with the separate plots, whether RERA registration mandatory if each plot is below 500 square meter?
Not required.
Okay.
If these bungalows are not a part of project, then not required.
Okay. Next question is from Salim. What actions are possible against the builder if the builder does not give possession even after the extended last date of possession remedies available for?
You can file complaint before RERA authority, and you will get remedy relief under section 18 18(1), 18(2) of the Rera Act.
Okay. Can developer pay interest on loan taken for the purpose of project cost from separate bank account? Actually, in Rajasthan, there is a specific clause of interest payable to bank in calculation of development cost. So we are considering interest payment in withdrawal calculation. Please guide.
This is I can only guide them if you ask me to give in a presentation on Rajasthan Rera certification. I can't say at this point. I have not gone through the provision of withdrawal of the Rajasthan Rera Authority.
Okay, sir. Again, the same. Is 30% amount lying in the promoter account, promoter transactions account must be used for project only? In practical, promoter is using such amount for other project. Actually, by name, it is a project free account.
The name of the account is project free account or transaction account. But the third proviso given in under section 42 LC, it says that the auditor is responsible to verify that the amount collected from the allottees has been used for the project only. And the amount collected means 100% amount, which has been transferred 70% in the collection account, in the separate account, and 30% in the free or transaction account. Means both the amount are should be used only for the project only. So if the builder are using for other purposes, that is not allowable.
Okay. Again, there is a question. What is the actual relevance of DLC rate for cost of land in case of land acquired in gift when actual land cost to be incurred zero?
Again, please ask again.
What is the actual relevance of DLC rate for cost of land in case land acquired in the gift when actual land cost to be incurred in zero?
Okay. The land cost is very relevant. How can you, if the land cost is taken zero, your cost of construction will be reduced. And if the cost of construction is reduced, how can you withdraw the amount, much amount, more amount? If you have the cost of land is been taken, some cost of land is taken, you are eligible to withdraw. Otherwise, you cannot withdraw the amount in
Correct.
proportionate to the completion of project.
Okay.
Next.
Um, Sir, I am fresher. There is a question by Girish. I am a fresher in this practice. I even does not friendly with the terminology also. Please, can you suggest some books?
You can take a Maharashtra WIRC book on Rera, Maharashtra Rera Law and Practice, and one more book is the uh, Real Estate Act 2016. It is from K.K. Khandelwal, former chairman of Haryana Rera Authorities. But Maharashtra Law and Practice book is very good. It is issued by our institute WIRC, so it will be very beneficial. But for doing practice in your state, you have to go through your state's provision.
Okay. Next question is, can 30% amount to be used for advertising regarding the project?
Yes, you can do.
Okay. Uh, what is the periodicity of certification of passbook by a CA for a separate passbook?
In Haryana, this has been given that you have to verify the passbook. The earlier guidelines issued by UP RERA Authority in 2020, November or December 2020, such provision was also there. But then they have removed the provision in new guidelines. I think this is not much relevance. If the banker is giving such bank statements, even if RERA Authority wants the bank statement, they should take directly from the banks.
Okay. Mm, OC is received for Rera registered project. Developer want to withdraw the balance lying in 70% account. Whether any specific certificate is required to be submitted to bank for withdrawing the balance lying in 70% account after project is completed.
Two things has been said. One is OC, and you have said project has been completed.
Yes.
Both the things are different. OC means occupancy certificate. The project is habitable. This does not mean that the project has been completed. For completion of the project, completion certificate is required. So before taking completion certificate, you cannot close the bank account, or you cannot withdraw a full amount from the bank account.
Okay. Uh, then the next question is, sir, when indexation cost of acquisition should be used?
When indexation cost of acquisition is used, I have not come across any such condition where indexation cost has been used. Nowhere we have used any indexation cost. It is a part of income tax, not a part of RERA.
Okay. Is RERA applicable for the villa project?
Yes, because villa are also a project. Only constructing a villa is not sufficient. You are constructing road, you are developing electricity poles, you are developing garden, you are developing sewer lines. Then only it becomes a project. So we are developing a project, then it is required to be registered.
What are the implication if a project is showing as a lapsed on RERA website?
The project has been shown as lapsed. Now, as per UP RERA guidelines, they have said that bank account will be closed in case of lapsed project. And once the project is lapsed, then it means no registration has been taken. And you can even, as per the strict interpretation of law, you cannot do any advertisement, marketing, booking, selling. Even you cannot take advance from the allottees. You cannot issue any demand letters.
Okay. Some bank asking monthly from CA for expense incurred for the project apart from 3 and 5 shall be issued such certificate.
Please ask again.
Some banks are asking monthly certificates that for expenses incurred for the project. So, shall we issue such certificate?
Why not? If work is coming, take fees, issue certificate.
Okay. Most of the questions are, sir, like share the PPT if possible.
Why not? I will share the PPT.
Okay. Mm, any other questions? The time is left with us. Members can put their queries. I think all the questions are answered, sir.
We have 13 minutes left, so you can ask any questions. If I can give answer, I will try
Okay.
to give answers.
Sir, for master in RERA practice, whether we should have expert knowledge of Cooperative Society Act or Multi Society Act, Transfer of Property Act, or please suggest the various act with the RERA. I should have expert knowledge.
If you want to become an expert, no one is expert. I am not an expert. I am trying to learning the RERA Act. And if you want to then, learn other acts also, our institute is carrying on a certification course on real estate laws. Join that course. Each and every law for real estate will be there. And for RERA is law in itself. I think if you are having understanding about the Contract Act, about the Apartment Act of your state, and RERA Act, some knowledge of Urban Planning and Development Act, that is sufficient.
Okay. Um, to determine the fair market value of the purchased acquired cost of land, development right, or lease right in real estate project, the acquired cost shall be the indexed cost of acquisition or DLC rate determined by the competent authority of the state.
DLC
Preliminary.
rate, DLC rate, DLC rate.
Okay, it should be the DLC rate. This is regarding OC received query. Form 4 has been taken from engineer. Any
Yeah.
specific CA certificate required to be submitted to bank or normal letter can be given to bank that OC is received. Hence, allow the developer to withdraw the balance from 70% account.
You cannot withdraw full amount from the bank. Even you have taken REG 4, you have to go to Rera authority. They, if they will approve, then you can withdraw final amount.
Okay. Next question is from where we can get the PPT.
I am sharing my number, and please send me the. Uh, sorry, this is my phone number, and send me WhatsApp message. I will send you, or send me email. I will send you the PPT.
Okay, member can take the screenshot from the screen. The sir has shared the mail ID and mobile number, so you can just ping him for the PPTs. Okay, next question is, sir, what all services can be offered to builder apart from certification and project registration?
Uh, you can do various type of service to the builder from starting to end. Means you can do project registration, you can do drafting of the agreements, even booking form, even your allotment letter, even uh, agreement for sale, and you can litigation on behalf of promoters, allottees. You can give certification, quarterly certificate, you can give annual certificate, and you can prepare project reports, and even day-to-day working. Rera consult You can give Rera consultancy to the promoters. Even project takeover is done through the due diligence for taken over of the project. Even your home buyer may ask you to please do due diligence whether this project is good or not.
Okay, sir, there is a question. To determine the fair market value of the acquired cost of land or development right or lease right in the real estate project, the acquired cost shall be the indexed cost of acquisition or DLC rate. I think sir had already
This
answered
has
this.
been repeatedly asked, because DLC rate has been issued by the government. So
Yes.
government will trust, authority will trust on district DM rate issued by the DM.
Okay. Sir, this PPT is useful for Maharashtra also.
Even 67, 70, 80% things are similar in each and every states.
Okay. Sir, there is a question. A construction company made a sale of independent house, not an apartment, and the completion certificate received in September 22. Sale deed was made on May 23, and the sale amount for 1495 was 2,44,000. No, 24,45,000. And construction is 22 lakh, and the land value was 21, and the total value 24 lakh 45,000, and the amount received was in an advance on April 23 10 lakh. Balance rupee was on May 23, and all the input claimed on that year. Kindly help me to find out the GST liability.
Please ask me separately, but I can tell you about the GST. And there were a notification in 2019 that in case of project which are going to develop after 1419, they are compulsorily required to be taken GST 1%, 5%, and 12% without ITC. 1% for affordable housing, 5% is for residential project, and 12% for commercial project. And 5% for residential project is available only if there are 15% of commercial area in the project. Otherwise, if more than 15% commercial area, then they have to charge 12%. And before the if the project is ongoing before 1/4/2019, then in such a case, the promoter has to submit one form with the respective GST authorities that we are going to adopt which method. Either we are going to old method of ITC taken and charge the GST from allottees, or the second method that where we will not take ITC and we will charge the GST from allottees only. So you have to decide this, and otherwise you may call me personally. I will understand your query and then give you answer.
Sir, how to tackle the situation when there is a change in promoter from partnership to LLP in Form 3 in case of some project?
I am not a expert in LLP, but in such a case, if there is any change, then you have to inform Rera authority, and
Okay.
your status will be changed in registration also.
Okay. Sir, in JD project, while making Form 3 withdrawal certificate, should we consider the land cost as well as while giving sold unsold statement, should we take ready reckoner rate for the flat plan to hand over landowner?
Please ask again. In case of JD,
Project, while making Form 3 withdrawal certificate, should we consider the land cost as well as while giving sold unsold statement? Should we take ready reckoner rate of the flats planned to hand over to landowner?
okay, if the unit is sold, because the Rera authority, who is asking this question, he is from Maharashtra or other states?
Vivek Lahoti, sir.
Which, ask him. He is asking
Vivek,
from
Vivek, sir, are you there? You can just put your chat in a chat that from where you are asking, from Maharashtra or a UP,
or other states, Maharashtra or other states.
or other states. It's not there. Vivek, sir, are you there? It's not there, sir.
Please move forward, because it will depend upon if the project is in Maharashtra, that will be separate answer in other
Okay.
states.
Sir, we can do one thing. Everybody is asking, can you share that screen where they can take the screenshot of your contact details so they can ping you? Members are requested to just take the screenshot. You have few minutes over there, so you can contact them. Sir can share the PPT and solve your query with respect to the things. Vivek, sir, the on the screen number is there. You can take the screenshot. Ranjit, sir. Okay. Vivek, sir, you can just ping on this number. Sir will help you as sir was asking that from Maharashtra you are or some other states. Okay, he is from Maharashtra only, sir.
Yeah,
Okay.
Maharashtra law is different, so he has to consult the expert of Maharashtra, because they have allowed the more than one promoter's registration. Landowner can take separate registration, and the developer can take separate registration. So they have to ask from the expert of Maharashtra.
Okay. I hope every question is answered and the sir is sharing the screen. You can just take the picture. Okay. Thank you so much, sir. As we come to the end of this session,
Thank you very much.
thank you. Thank you. On the behalf of everyone, thank you for your time, efforts, and incredible insights. We deeply appreciate your contribution, especially considering the circumstances. Thank you once again. Thank you, everyone, for joining us today. So,